Hey everybody, I'm Jean Chatsky. Thanks so much for joining me today on Her Money. So, I am usually the optimist in the room. I'm usually not even one to be pessimistic about the economy because I believe that there is pretty much always something that we can do, if not the economy writ large, well, then at least to make our own personal economies better, even if the markets are throwing us for a loop. But I gotta say, I am worried right now. Not because of the Dow, not because of inflation, but because of credit card debt. The latest data that we have from the New York Fed from the end of 2022 shows that credit card balances reached an all-time high of 986 billion nationally. The average debt that each American carries has also climbed to $5,800, which is up about $700 from 2020. And with inflation still chipping away in no small way at our spending power, it's not surprising to me that people have come to lean more on their credit cards. But the interest rate hikes that the Fed has said it will not be stopping anytime soon make it a tough time and a pretty bad idea to take on more debt than you have to. And when you add to all this the fact that 43% of people who have credit card debt are not even sure what interest rates they're being charged, the average is around 20%, by the way, and that 65% of people believe that carrying a small balance on your credit card each month actually improves your score. It doesn't. We'll dig into that. Then it makes it clear why we need to get back to the basics. So, what are the best rules for building credit? What can we do to get a hold of debt that is spiraling out of control? And how can we use credit cards as a helpful tool, as part of a healthy, disciplined budget? Here to help me answer all of those questions and many more, we've got Jennifer Streaks. Jennifer is a senior personal finance reporter and spokesperson for Insider. She's covered personal finance and business for CNBC, Forbes, Black Enterprise Magazine, and she is the author of Thrive Affordably, your month-to-month guide to living your best life without breaking the bank. Jennifer, nice to see you.
Nice to see you too. Thank you so much for having me.
Anytime, anytime. I went into a few of the reasons why credit card debt is rising at the top of the show. But another reason that I've been hearing about recently is something called revenge spending. When people shop to get back at something bad that's happened in their lives, maybe like living through a pandemic. Is this something that you've seen in your work lately?
Oh, definitely. Revenge spending, revenge traveling. You have so many people that are trying to reclaim what it is they think they lost during COVID. And it actually can lead to a lot of overspending, which is what I've been seeing in my work because it's how are you making this happen? You want to buy all of these things, you want to take all these trips all of a sudden because you feel like you lost something a year ago or 2 years ago, and it's putting people into debt.
The pandemic allowed us to build up our savings accounts. I was following, I have this habit of tracking, as maybe you do as well, the personal savings rate in the United States. And during COVID, it popped sky high. Whenever we got a stimulus payment, you would see the savings rate in the United States pop. At one point, it got as high as 33%, which, for some context, it usually sits at around 5%. That's all gone at this point, or it's mostly gone, right?
Right, definitely. We are burning through it. I mean, when you sit here and you say that typically the savings rate is at 5%, everything was closed down during COVID. You didn't have any place to spend money. So that's why it was easier to save. And now that we are out of that, people say, "Oh, I'm flush with cash. I can buy this. I can go here. I can go out to eat again 3 times a week. And I have this money," but we are burning through it. And with inflation still with us, that's not exactly the best plan.
How do we address that temptation to overspend when we're ready to treat ourselves? I mean, quite frankly, we did, many of us, lose a couple of years.
True, but you have to just be determined to stick to your budget. If you do want to treat yourself every now and again, it can't be something that just blows your budget, because that's what you're seeing. You're seeing someone that normally wouldn't be able to afford, let's say, a $3,000 trip, and they're putting it on this credit card, and that's what they're doing. And that is a budget buster if you cannot afford that. So I think you have to ask yourself these questions. Do I have this money in the bank to spend right now? I want to treat myself on this item. How am I going to afford it? Can I pay for it right now? Am I going to put it on a credit card? Is it something that's going to break my budget? And if it's something that you can't pay for right now, you're going to put it on a high interest credit card, then it should be avoided.
Well, when you look at credit card behavior in this country, what are the common mistakes that you see people making when using their credit cards?
Only making the minimum payment, carrying a balance every month, and of course, missing payments. And that's just going to kill your credit history.
Yeah, I don't think people understand that even a 30-day late, even a 60-day late, even one, and there are some credit card companies now that will give you a little bit of grace, that will allow you one late payment. But the problem with people who are late is that they tend to be chronically late, and that kills a credit score. So if you think that you're going to miss a payment, if you don't have the money to make that payment, even a minimum, or that you have missed a payment, what's the right thing to do? What's the move to make at that point?
As soon as you know that you're going to miss a payment, immediately get in contact with the creditor and say, this has happened. I'm in this situation. Maybe you've lost a job. Maybe you have reduced hours. Something happened, illness. I see I'm not going to make the payment this month. Can I get on a payment plan with you? Can we work something out? I am being proactive. I'm calling you ahead of time. I'm letting you know what my situation is. Hopefully, if you have up until that point a great history with this creditor, they will be happy to work with you. It's in the creditor's best interest to work with you. They want you to keep your account on track with them, and they want to get paid. So it's in their interest to work with you.
And when you place that call to the credit card company, are there other things that you should be asking for? I mean, I've read these studies that say we should all be calling our credit card companies and asking for lower interest rates. We should be asking for additional perks. I mean, what's on the table that is available to me that I'm not asking for?
I feel like everything is open to negotiation, especially if you are a good customer. You should be asking if there's a late fee, you should ask for it to be waived. You should negotiate your interest rate. You should know what your interest rate is. And if it's high and you've had that credit card a year or 2 years and you've been making on time payments, maybe paying your balance off or not carrying a high balance, then say, hey, I've been a great customer for you all, and I want to negotiate down my interest rate. I think it's too high. It's too high for what it is that I want to pay. And I want to be able to continue to use this card as a good financial tool for me. And right now, at this interest rate, it's not. So let's talk about reducing the interest rate.
I have helped people through my work over the years for whom credit cards have become kind of addictive. They open a card, they spend to the limit. They open another card, they spend to the limit. They open a store card, they spend to the limit. All of a sudden, they have a portfolio of credit cards, and half their paycheck is going just to making these payments. How many credit cards should a person have? And in terms of the best way to use them, how much is it okay to put on your card each month? What's the ideal utilization rate?
I think 2 credit cards is enough.
And
I think
what kind of cards should they be?
I'll use myself as an example. I have a card for travel that has a higher limit. So I live away from my family. If I needed to get a ticket like that, I know that I can go to the airport and do that if I needed to get home. And then I have like an everyday credit card that I get points, I get whatever rewards, and I use that. I might use it at the grocery store. I might use it at the gas station because I am building up rewards. And that's what I have. I have two credit cards that fulfill specific purposes. Now, on both of these cards, I don't go over, and no one should go over 30% utilization because of your balance, 30% of whatever your limit is for the card. So with credit utilization, you don't want to go over 30% of your credit card limit. So that means if you have a $10,000 limit, you're not going to spend more than $3,000 on the credit card.
What if you do spend more than $3,000? Let's say you've got to go home, right? You've got a $10,000 limit on that card. The ticket is $3,500. You're over the 30% mark. That's going to take your credit score down. We're going to talk a little bit more about credit scores in a moment. But what if you know you're going to go over that limit? What's the move?
Then I immediately try to pay it off before the statement date. So I get it down before it has the total full impact. Sometimes you have to do what you have to do, but being a savvy credit card user means that you know how to sort of back yourself out of these situations.
I do that too. I mean, I have some months that are bigger spending than others. And if I feel like I'm closing in on my utilization, I just make an
Mhm.
extra payment to the credit card company. I think people are unaware that you can do that you can just I mean, you have to have the money, but send them
Yes.
some money to bring that utilization back into line. You mentioned rewards. What are the best ways to use rewards these days?
Okay, so a few things about rewards credit cards. I mentioned earlier that you need to sort of be a credit savvy person. Everybody does not need a rewards card. That is the hook. It's just like when you go into a store, retail store, and they say, oh, you're going to get 10% off your purchase today if you open up this credit card. But do you really need that store card?
No,
And so it's the
you do
same
not need
thing.
it. Let me just answer that question. You do not need that store
No,
card.
you do not. But with rewards cards, that is the hook. Oh, you're going to save this much on gas, or you're going to gain all these miles. If you're not a travel person, then you don't need that credit card. So that's the first thing. Understand whether or not this card is really going to work for you with the life that you lead. First and foremost, it might be something you don't even need to have in your portfolio. And then check and see if these rewards are something that you want. Is it worth what you're going to be paying? Is it going to be worth the interest rate? Is it going to be worth whatever the balance is that you carry on this card? Or if can you pay it off? And the thing is too, with any credit card, you have to be able to afford it. Any credit card. Can you afford this card?
Often the rewards cards have significantly higher annual fees, and the
Mhm.
bigger the portfolio of rewards, the more they're going to cost you. So if you're looking at a Chase Sapphire Reserve, or if you're
Mhm.
looking at Amex Platinum, you're looking at spending $700 a year. And there are things that you'll get, right? You'll get a travel credit, you'll get a credit on Uber, you'll get entrance to airport lounges in some cases, but you got to add up all those benefits and make sure that the cost is something that you would pay for otherwise, I think.
Yeah, it's a cost benefit analysis. I mean, that Amex Platinum, I think that the annual fee is $695.
Right.
You really have to say to yourself, is it going to be worth it? Am I going to use these rewards? Is it going to be a benefit to me?
So what's the default if the answer to that is no? You're not a big traveler. It doesn't make sense necessarily to have a mileage card. Is it worth getting a cashback card?
Maybe a cashback card would work for you, but you have to understand how these things work, really sit down and look at the pros and the cons and make sure that it's beneficial to you. And as I stated earlier, with any credit card, can you afford the card? It doesn't matter what the rewards are, what the benefits are. If you are over your credit utilization limit, if you're carrying a high balance every month, and if the interest rate is high, it doesn't matter.
Right. And I think for a person like that, the biggest benefit that you can actually get is a low interest rate, or as low an interest rate as possible, which brings up the question of balance transfers. There are these offers, and they are in existence even though credit card interest rates and interest rates overall are going up. There are offers out there to transfer your balance to a card that has a 0% or very low interest rate for a while. Explain how these work and who they're good for.
So with the transfer cards, it is a 0% APR, like you said, for a while, typically a year. So you will transfer your high interest credit card debt onto the 0% interest rate card. And that should seemingly take care of the problem. But you have a certain period of time to pay that entire balance off if you're going to take advantage of the 0% APR. And if you don't do it, and the thing is, I've read language that said if you miss it, then the interest on the entirety of what you transferred will then be applied. So for instance, you transfer $10,000. At the end of 12 months, you still owe $1,800. You feel like you've done great. I've gotten it down to $1,800. This is wonderful. But you still didn't pay it off within that year. So now, whatever the regular APR is going to be, and it's probably going to be high, is applied to the $10,000, which is what you initially transferred, not the $1,800. You have really got to read that paperwork. And so a balance transfer card works only if you can afford to pay that off, and you can be really diligent about it and really pay that off within the allotted time, unless you're going to get caught with that interest.
So such a good warning. And there are also balance transfer fees, typically about 3% that you have
Correct.
to count on. I want to dig in, Jennifer, to the best methods for repaying debt, and also this idea of keeping your credit score as high as possible so that we can negotiate our interest rates down. So we're going to come back, Jennifer, and I want to dig into the various methods for debt repayment, what works best for what kind of person. I also want to talk about keeping your credit score up so that you can negotiate your interest rates down as low as possible. I'm talking with Jennifer Streaks, Senior Personal Finance Reporter at Insider. So let's talk about these debt repayment methods, Jennifer. I mean, I know there's a bunch of them out there. There's the snowball, there's the avalanche, there's the blizzard. What's your favorite?
What is my favorite? Just paying it off. But but I think I would definitely go with getting rid of the highest interest debt first, because that's the one that you're paying the most money on. That's what's costing you the most money. So get rid of that first, and then on down the line.
Okay, so you're an avalancher.
An avalancher.
And it's easier to do if you've got a good credit score. There's this misnomer out there that you can't have a good credit score if you have a lot of debt. It's just not true.
It's not true. I mean, do you pay your bills every month? What your credit score is made up of is how you pay your bills. If you're paying your bills every month, I know I have several examples of this, of people that have credit cards. They use them for different reasons, but they pay it off, and they pay it off in full every month. And their credit score is in the 800s because they are showing that they can pay their bills, and they are not relying on their credit. That's what people don't understand. When you are in a lot of credit card debt and you're not paying it off, or you're not keeping it down, you're not keeping it under that 30% utilization, what you're signaling to lenders is that you're dependent on this credit and you cannot pay your bills.
So what other factors go into the mix? You mentioned paying your bills on time, and again, you got to pay them on time every time.
Every one.
Put a minimum payment on automatic pilot. Boost it up so you pay it off as much as you possibly can, but make sure that some money gets sent to the credit card company. And credit utilization, I know, is a big factor. It makes you, it represents about 35% of your score. What else is in the mix?
Credit history in terms of how long you've had credit, your credit mix, credit cards, mortgage, car note. Do you have a favorable credit mix? And then new credit. Also,
Is new credit a good thing or a bad thing?
It depends, because what happens with new credit, when you apply for credit, it generates something called an inquiry on your credit report. And so if you have too many inquiries, that also impacts your credit score negatively, because it's a signal to lenders like you're trying to get credit. Why do you need this credit? And now they're looking at your credit profile and saying, is she in debt? Why is she all of a sudden applying for credit, all of a sudden in Moss? And so it dings your credit score.
And when you talk about credit history and length of credit history, what's important? How much do you want to aim for there?
Well, I mean, what I think it is just how long you've had good credit history. If you have a credit card that you've been paying on time or paying off every month for the past 5 years, that's excellent. That's a great length of time. That a person that might have the same thing, a credit card that they've been paying on for the past year, you're going to have a higher credit score, because you've had longer good on time payments.
One of the really confusing things about credit scoring is this this balance that we try to achieve in closing cards. So let's say you're paying down debt and you're on your avalanche, you're doing well, you retire the debt on a particular card, you've got more than 2 cards in your portfolio. Should you or should you not get rid of it? Because getting rid of it, especially if you have that big fat credit line, is going to hurt your utilization.
Well, and it's also going to hurt the length of time you've been paying. Once you close it, that credit line is closed. So it's not going to continue to necessarily impact your score in a positive way, not as much as an open line of credit. The best thing to do is just cut the credit card up.
And not use it.
Just get rid of it and don't use it. Throw it away. My mom used to do that all the time. She would finish like a Belk credit card and be done with it. Cut it up and throw it away and be done with it.
But not close it.
Yeah, you don't have to close it.
All right. How often do you check your credit score and your credit report, and where do you get that information?
So for me, I try to check it every month. Just for me, I think anyone else should at least check it quarterly. You can go to annualcreditreport.com to get your free report. But to get your credit score, you're probably going to have to go to someplace like a creditkarma.com to get it, just to get your score and check that out.
Yeah, they'll give it to you for free. You just have to know that they're gonna mark it to you, and some of your credit cards may give it to you as well. I know I'm a fan of freezing your credit. My credit's been frozen for a very long time. It can help protect you from fraud, but a recent study from Identity Theft Resource, take that one more time. I'm a big fan of freezing your credit. It can actually help protect you from fraud because it prevents somebody else from getting credit in your name. But the Identity Theft Resource Center recently did a study, and they found that less than a third of Americans have frozen their credit at any point in their lives. What do you want to say to them to encourage this good behavior?
Yes, because financial scams are on the rise. And it's such an easy and free way to protect yourself from identity theft. You would have to contact all three of the credit bureaus, but you can open up an account with them and do it online, or you can call over the phone. If you call over the phone, they're probably going to ask you, of course, security questions to make sure you are you. But it is the best way and the best free way to protect yourself from identity theft during this time.
Yeah, and it's not even a pain in the ass when you are trying to apply for credit. You just have to call the bureaus back or get in touch with them online. Really, online is the easier way to do it and lift the freeze. Tell them to leave the freeze off for a week, however long it's going to take for that new lender to run your credit. And then it'll just settle right back on. Okay, Jennifer, last question, and I want to come back to where we started. For
Okay.
people listening who've come to rely on their cards to stretch their budgets, what is the very first step that they should take to break the cycle of debt?
Stop using the credit card. That's A. Just say that I am just putting this down. I mean, I get it. Inflation is still with us. There's a expense. It's expensive to live now, and there's been an increase in consumer goods across the board. But you cannot rely on credit, especially if you cannot afford to pay it. So you have got to put together a realistic budget, stick to that budget, get rid of, just stop using it. If you have to cut it up, and just do that, and then create a realistic debt repayment plan so you can get out of that credit card debt and stay out of it. But it all starts with a realistic budget.
Jennifer Streaks from Insider, thank you so much for doing this with us today.
Thank you for having me.